The cryptocurrency market is beginning to show clear signs that liquidity and trading activity are returning in a major way. Over the last several weeks, investors have been waiting for confirmation that capital is flowing back into digital assets, and recent price action across multiple cryptocurrencies suggests that this process may already be underway. One of the most interesting developments came from Stellar's XLM token, where traders witnessed an extraordinary candle wick that briefly pushed the price dramatically higher. Events like these do not happen every day, and they often attract significant attention from market participants looking for clues about where the broader crypto market could be headed next. For XRP investors, the big question is simple. What does this unusual activity mean for XRP's next major move? There are several indicators suggesting that XRP may be preparing for something significant, and when you examine the charts closely, the setup becomes increasingly difficult to ignore. While short-term price movements can always be unpredictable, there are multiple factors aligning that suggest momentum may be building beneath the surface. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we'll talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Before diving into the charts and market developments, it is important to address a topic that continues to generate debate within the cryptocurrency community. Many investors look at blockchains that support extensive smart contract functionality and conclude that every blockchain should follow the same path. As a result, there are frequent arguments suggesting that the XRP ledger should attempt to replicate the features and capabilities offered by other major blockchain networks. However, the relationship between blockchain functionality and token value is far more complicated than many people realize. A blockchain can introduce countless features, support thousands of developers, and still struggle to generate meaningful value for its native asset. The assumption that more functionality automatically leads to higher prices is not always supported by historical evidence. A useful example is Cardano. When smart contracts were introduced, many investors expected that development activity would explode and that the token price would immediately benefit. Instead, the market delivered a very different outcome, with significant price declines occurring after the launch. This demonstrates that technological upgrades alone do not guarantee positive price performance. The reality is that unlimited functionality comes with trade-offs. While it may attract developers and encourage experimentation, it can also introduce greater complexity, additional vulnerabilities, and increased competition. Today, numerous blockchain projects are fighting for dominance in the smart contract ecosystem. Projects such as Solana, Hedera, Ethereum, Cardano, and several newer networks are all competing to become the preferred destination for developers building decentralized applications. The XRP ledger has chosen a very different strategy. Instead of attempting to support every possible feature imaginable, its focus has traditionally been on implementing the core financial tools that are most relevant to real-world finance. Rather than creating an environment with endless possibilities and endless risks, the XRP ledger emphasizes efficiency, reliability, and functionality that directly supports financial transactions and settlement. This philosophy makes XRP fundamentally different from many competing blockchain projects. While other networks race to become the most flexible development platform, XRP is focused on solving specific financial problems. That distinction often gets overlooked, but it may ultimately prove to be one of XRP's greatest strengths. Turning back to current market activity, the unusual XLM price spike deserves attention. On Bybit, one of the largest cryptocurrency exchanges in the world, XLM experienced an enormous candle wick that briefly pushed prices to approximately 2.20 cents. What makes this event especially noteworthy is the fact that Bybit possesses substantial liquidity. This was not a small exchange experiencing temporary order book issues. This occurred on a major trading platform that processes significant daily volume. Events like this suggest that demand can occasionally overwhelm available liquidity, causing rapid and dramatic price movements. Whether someone interprets this as evidence of suppressed prices, liquidity imbalances, or simply market mechanics, it clearly demonstrates that strong buying pressure can emerge unexpectedly. More importantly, the XLM movement may signal something broader. It suggests that excitement is returning to the cryptocurrency market. Increased participation, rising volume, and renewed speculation often spread from one asset to another. Historically, capital rarely stays concentrated in a single cryptocurrency forever. Instead, liquidity tends to rotate throughout the market over time. Many investors are concerned whenever another cryptocurrency begins rallying before XRP. However, this pattern is far from unusual. Throughout crypto history, countless assets have experienced major rallies before XRP eventually joined the move. In many cases, XRP not only caught up, but maintained its gains more effectively than numerous competing cryptocurrencies. That is why focusing exclusively on which asset moves first can sometimes be misleading. The more important development is the return of market enthusiasm and capital. Once liquidity begins flowing back into the sector, it often finds its way into multiple projects, including XRP. Whether that process unfolds over the coming days, weeks, or months is impossible to predict with certainty. What matters is that the broader environment appears increasingly favorable compared to periods when liquidity was leaving the market altogether. Looking specifically at XRP's chart structure, there are several encouraging observations. One of the strongest characteristics of the current setup is how well XRP has maintained its position near previous major highs. Following periods of strong price appreciation, many assets experience severe retracements that erase much of their progress. XRP, however, has demonstrated considerable resilience. Consolidation near important resistance levels is often viewed as a healthy technical development because it suggests that buyers are willing to continue accumulating rather than immediately taking profits. Instead of collapsing after previous rallies, XRP has spent significant time building support in elevated price zones. Compared to XLM, XRP's chart structure appears cleaner and more organized. While XLM experienced much deeper declines relative to its historical highs, XRP has managed to hold key levels more effectively. This creates a technical picture that many traders find attractive because it suggests strength rather than weakness. Beyond price charts, there is another factor that deserves attention: Ripple's broader business strategy. Over the past several years, Ripple has worked to expand its ecosystem beyond simple payments. The company has pursued a strategy that integrates multiple financial services into a unified framework. One particularly important area involves institutional infrastructure. The concept is straightforward. Instead of forcing financial institutions to rely on separate providers for custody, execution, settlement, lending, borrowing, and trading, Ripple is building an ecosystem where many of these services can exist within a connected framework. This approach resembles the strategy used by some of the world's most successful technology companies. Rather than offering a single isolated product, they create an entire ecosystem that makes participation easier and more efficient. The more services integrated into one environment, the more valuable that environment becomes to users. Another significant development involves the tokenization of real-world assets. While tokenization receives enormous attention across the industry, one challenge remains obvious. Creating tokenized assets is only part of the equation. Those assets must also be actively traded and settled if they are to generate meaningful economic activity. This is where infrastructure becomes crucial. If institutions can tokenize assets, trade them efficiently, and settle transactions through the same ecosystem, adoption becomes much easier. Many supporters believe this is an area where Ripple's long-term strategy could create substantial value for the XRP ledger. Perhaps the most compelling argument for XRP's future revolves around global liquidity. Consider a scenario where two countries need to settle international trade obligations. Each country naturally prefers its own currency, and geopolitical realities make reliance on a single reserve currency increasingly complicated. As global financial systems become more fragmented, the demand for neutral settlement mechanisms could increase. Nations may continue conducting business with one another while simultaneously seeking alternatives that reduce dependence on competing national currencies. This is where XRP's proposed value proposition becomes particularly interesting. Supporters argue that XRP can function as a neutral bridge asset, enabling value to move efficiently between different currencies and financial systems. Instead of requiring one party to hold another nation's currency, liquidity could theoretically be sourced through XRP as an intermediary asset. Whether this vision ultimately reaches global scale remains to be seen. However, the concept addresses a problem that few cryptocurrencies are specifically targeting. Many projects focus on decentralized applications, gaming, or smart contracts. XRP's focus on liquidity, settlement, and cross-border value transfer gives it a distinct position within the broader crypto landscape. When combined with the XRP ledger's speed, efficiency, and emphasis on financial utility, this creates a use case that remains unique even after years of competition. New blockchain projects continue emerging every year, but building relationships with major financial institutions and developing infrastructure for global liquidity is a challenge that requires significant time, resources, and trust. For that reason, many XRP supporters believe the asset occupies a category of its own. While other cryptocurrencies compete for developer attention, XRP continues pursuing a strategy centered on real-world financial integration. If global demand for neutral liquidity solutions grows in the years ahead, that positioning could become increasingly important. As liquidity returns to the crypto market and trading activity accelerates, investors will be watching closely to see whether XRP follows the signals currently appearing elsewhere in the market. The charts are showing strength, institutional infrastructure continues expanding, and the long-term utility narrative remains intact. Whether the next major move happens tomorrow or later in the cycle, many market participants believe the foundation for XRP's future growth is steadily being built beneath the surface. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. Thank you for watching.